Right, so should we start? Good to go, right? Thank you so much. We didn't realize that this is the last session, so thank you so much for sticking around. And I hope we make it even more interesting with all my fellow panelists. I think we've brainstormed quite a lot in terms of what we want to talk about, but I think some things might come impromptu. That's how we've kept it. So we have a couple of questions, but I think the central theme is building trust in the whole digital wealth management space, and that really comes on as to where the client is of a bigger focus, and then how do we really look at elements in terms of how do we start building in that trust, primarily from perspectives of security and compliance, but also some of the risks that we are seeing in the market today. We see a lot of security incidents happening to fintech firms. Most of them are either a ransomware or a cyber attack that's happened and things like that. But the end user and the customer trust really goes down. So keeping that trust, being the cornerstone, how do you really see, and this is open to each one of you, how do you really see security and compliance in the entire ecosystem? What's your view? And probably a minute or two, just talking about your viewpoints would be good.
Yeah. Hi, everyone. So I'll speak from the context of AssetPlus. So quickly, we work majorly with retail investors and create financial awareness for them via mutual fund advisors who are part of our advisory network. So we are a B2B2C platform focusing on mutual funds. So that's the perspective I'm going to be bringing in. So in many of the other industries, what we see is compliance is usually something that does not have any business incentive at all. Right, so in fact, in most of the cases, it ends up hampering growth, or you want to do something crazy, maybe a growth hack, but you're not able to do because compliance is going to stop you from doing it. But the way I see it is, for our target segment of mutual fund investors, having a very strong compliance framework builds trust very, very quickly. So in fact, that itself becomes a strong value proposition when we go talk to first-time investor in mutual funds, because the guys who are moving from fixed deposits and other traditional assets, they are already wary of mutual fund as a product. They have never invested. There's volatility around it, right? So the moment we maybe say flash an audit this saying that, hey, look, we are compliant in this, or say we work with an exchange, so all your payments are completely secure, or maybe we are licensed by so-and-so regulator or SRO, it usually ends up being a very say additional value proposition that we can convince people to use our services over someone else, because fortunately or unfortunately, a lot of people use compliance as a value proposition. It's all about easy access, faster transactions, view all your investments in one place. So I think there's a huge scope of building trust by talking about compliance and how you are very well regulated and that your money is very safe, especially when you work with a lot of first-time clientele in financial products.
I think Ajay wants to go next, or
I'll quickly add a few cents to this. Right, so guys at StockGro, we teach people how to trade and invest in stock market. It's an education platform which is enabling millennials to start becoming investment ready. I'll take it in two different contexts, right? So one is security and the second is compliance. And Kartik, especially in a startup environment where you are really disrupting the market, and if you're a true disruptor out there, compliance and security both will be a catch-up game for you. That is, a startup is going to run much faster, and over a period of time, the compliance is going to catch up with you. Regulators would watch from the sideline for a very long time, and then they would start putting the guardrails. As a business, what you have to do is you have to be very cognizant of what are the things that are going to break. And if you know what is going to break, you can start putting those guardrails for yourself even before someone else comes in. Security is a different animal. Mostly you would be depending on the third party who's going to help you with the security pieces. Everything that you can put into your system, which doesn't make your system rigid, which doesn't make you slow, as long as you can keep plugging in everything that's available, all the certifications that are available, which, as he said, gives trust to users saying, this is a place where I can start parking my money or I can part away with my money, it works for us.
Yeah. No, interesting points you mentioned around, outsourcing the security itself, and then, how do you really manage that fine balance across?
No, if I may,
Shobhit, yeah.
so first of all, thank you for having me here. I think I just want to bring out one important point. When we are talking about digital wealth management, it's actually a combination of two things. You're talking about a digital platform and you're talking about wealth management. And I think in both of those, the center of this is the customer. And that customer is actually looking forward to someone to build trust. And most of the times we forget that that trust comes in more understanding that customer better. And people will build trust when they think that the person who's serving me understands me more. And a lot of times, at least in the wealth management industry, it is more about products and showcasing those products or taking those products to customers. But I think the regulation provides for know your customer, but a lot of wealth management platforms don't really cater to it to the way it should be. So to my mind, putting that customer and understanding that customer is a very important part of it. Secondly, I think wealth management is equally more importantly about understanding your own domain. And I'm slightly going beyond. I know there are experts here who know their domain really, really well, but I'm talking more about from an industry standpoint that the domain skill or the knowledge piece that you bring to your customer is an equal amount of trust. If your customer can trust you for understanding different kinds of investment products, if he can trust you for knowing what is best for him, he will build trust. And I think those two pieces are critical from a wealth management standpoint. Similarly, when you're talking about it from a digital standpoint, to my mind, I think there was a generation earlier where trust used to be about brands. People would associate with large brands and say that I can trust them because they are there on the billboards, they are there that everyone knows their name, so I can trust them. But over periods of time, I think at least on digital platforms, availability stands for trust. If I, on a Sunday afternoon, I'm going to go on my app and I'm going to try out something, and if it doesn't work, it is a trust deficit for me. Of course, things around security, things around confidentiality are equally important. But I think ensuring that the data that you are providing the customer is accurate, that data is available, that data is confidential, and that data has always been provided to him in a transparent manner adds to that level of trust. So I would bring all of this back together to keep the customer in the center, because that's really what all of us are solving for. And we need to look at it both from a wealth management standpoint as well as from a digital platform standpoint.
Right. I'll just take a segue from that, the KYC bit you mentioned. And there are a lot of instances where, and I have also personally experienced it. There are a number of instances where you have a client who is probably getting onboarded on the platform. But for some reason, the KYC just doesn't happen, right? I mean, everything is in place, but it fails, right, for some reason. And then that frustration builds. And now, given that, there are so many competitors and competitor apps and platforms available, it's very easy for the end client to really switch to another app, right? And there are so many similar fintechs, as you might agree. How do you, in that race to balance security controls, KYC norms, to balance that as well as, be the top of your business? How do you balance that? Maybe, Vasanth, you want to take that, or anyone else?
No, actually, the question for me is not very relevant, Kartik, because we work with customers who already have their Demat account, so they've already KYC'd, so we don't necessarily have to do the KYC. But I think just on your first question itself, security compliance are inbuilt into our business model. For those who don't know, smallcase is a platform where you can invest into portfolios of stocks, ETFs, REITs, and much more coming soon. These are all created by...
You do KYC before the client gets onboarded, right?
That's what client is not onboarded.
Okay.
I'm just coming to that. So that's what a client can discover from these ready-made portfolios. These are all created by SEBI registered entities. They then can transact it with their respective brokerage. So in most cases, clients come to us with an existing brokerage account. We work with 300 plus market participants, all of them licensed, regulated, some of the most respected, largest brands and institutions in our space, right? So without security and compliance, we couldn't even go live. So it's inbuilt really into our business model. We couldn't really do without it. Like every month there's multiple audits, including it from EY as well. So with 300 different, so it's something that it's second nature to us. We've been born with it so much. And I think just extending a little bit of Shobhit's point as well, very rightly said that trust used to be about vintage legacy earlier, like big brands. Now it's more about convenience. Like just look at how, I don't know if it's true for everybody, but like at least one generation, like our parents' generation, just 5-6 years back, any large ticket, forget a financial purchase, any purchase, they wouldn't trust a digital method, right? Like investing, credit, or even anything. So that's like completely flipped now. Like now even if it was available outside somewhere nearby, then they would trust it, knowing that there was a storefront. Today, they, like my parents, dismiss a provider just because their UI UX isn't good. So, like I think the whole thing is really.
Vishranth comes in. Yeah.
Exactly. So the trust equation has changed to kind of how your digital pieces, and some of this is now hygiene, where security compliance, without which you either can't launch in our case or you can't scale.
No, I completely relate with you, because I have been trying to get my family onboarded onto a digital platform, and they have completely dismissed it, saying that, no, I have my mutual fund advisor, and I'm very comfortable, talking to him. So absolutely, completely relate to that.
I think so. When it comes to the UI UX and the features part of it, so two things we have done has worked out very well for us. So number one is new innovation is required. How do we make things easy for customers? But it's also very important to have put in a paranoid engineering team. So like pretty much any feature that we develop, we will have to go ahead with the assumption that it is going to get, people are going to try breaking it. So doing good amount of testing prior to launching the features helps quite a bit. That will move the product feature launch maybe by a couple of weeks, but will definitely not give you sleepless nights. So that's one policy we have followed that my co-founder and CTO had set up, which works very well for us. And second thumb rule, based on what we have seen the regulators do and the checks and balances they put. So we generally refrain from collecting any additional data. So only the data that is required for the core business of possibly making them transact and verifying KYC is all that we do. Because we have seen many smaller players, they get very tempted from a UI UX perspective. Okay, let me maybe collect an extra bank statement from a customer that's not really required for the business, or maybe let me have access to their OTPs. So any data collection that's not required for the core business eventually leads to the business thinking, okay, how can I use this data to monetize in some form, and that can in large cases end up with some or the other regulatory hurdles. So the basic philosophy we've been following is there's no gray area at all in this. So it needs to be completely white, or anything that's not white is something we should never get into. So that's fortunately worked out well for us.
But I'll just add one point to that. I think, of course, because we are talking about fintechs and we are in the meet where everybody is talking about great UI UX. I think with my experience of last 18 years in this industry, money is serious business. And we keep talking about it at Angel One Wealth all the time, that people who have earned that money are not necessarily looking at coming to place and trying to get dazzled by their UI UX. And I think that's one piece which traditional players have understood well, that when you're trying to look at building trust, that person needs to know that this is a person who can manage my wealth or who can advise me on my wealth. He's a serious contender. He's not going to just take these things lightly. So I think it's a very important part in trust building as well. I look at it as a role of a doctor in a manner, that when you go to a doctor, you're not really looking at how nicely he's done up his office. Of course, basic hygienes, etc. are necessary. But beyond that, you're looking at someone who can, give you that ray of hope that this is really someone who knows his stuff and he's going to take care of my money. I think that's the important part of that trust building that I'll wish to emphasize.
Should the doctor be dressed in a leather jacket, otherwise you won't take him seriously. So Ajay, you had some.
Yeah. It's like when you're building a digital-first organization where you don't have a brick-and-mortar storefront to start building that trust. Literally what you have to do is relentless execution, day in, day out. But in addition to that, what you need to do is right positioning, right messaging, right communication. Every time there's something which goes wrong, and this happens from large organizations and more so in startups, something will break, and you can't control all the factors out there. But the moment that happens, you have to know how to communicate it right with your customers immediately. If you're honest in your communication, and if you know how to come back from it, how to fix that problem, not let it happen again, it solves that trust issue with the customers who are first your digital first customer, and they know if there's a problem and if the team has solved it, we can trust these guys to go going forward from here.
So I think we talked a lot and a lot of interesting points around how do you build that trust. And while we talked about certain practices you mentioned that your tech team also implements, how do you kind of put an overarching governance structure? Because in any risk in cybersecurity matters, you always say that it has to flow top down, right? And you all as CEOs have to relay that message that security has to be taken seriously, whether it is to do with something leaking out or something's under attack, or something has leaked out and it violates privacy norms, right? And now that the bill is coming, it will attract even more fines and penalties. So how do you put any thoughts on how do you build that governance structure within your ecosystem? I think some thoughts from that side would be helpful.
No, I think in our case, frankly, it's a zero trust architecture that we build on. So you assume things are going to go wrong. That's the starting premise, because you cannot afford for things to go wrong. But you start with assuming that at every node, at every possible step of the process, something will break. And I think that leads to you to think of what is going to happen if it breaks. And that's where I think plan B works. So in our kind of build outs, we always think of everything with a plan B, that if something is going to go wrong, we are going to fall back to a plan B. It's almost like having a disaster recovery or a BCP site, etc. that if things go wrong, how am I going to resort to it? So it's zero trust architecture that you assume things will go wrong, and you already have plans in place to assume that when things will go wrong, I'm going to go back to plan B, and hopefully then things will flow on as they should.
Very interesting to hear zero trust from the CXO community. Great. Yours.
So my perspective here ties down a bit to what I had mentioned for the first question as well. So the moment the company takes a stance that says, among all the value propositions I'm going to put forth to the clients, compliance is going to be one of it, right? So that's a very good top-down approach, because if the incentives are only on the business growth and other business-related aspects, even the product team, tech teams can get swayed and start thinking of, okay, how else can I make money? What more data can I gather? But the moment we formally bring, say, compliance as a strong value proposition and drive that even part of the KPIs, so we have the smartest minds in engineering and product thinking, okay, how do I put forth compliance in a better manner to the customer? So that helps us quite a bit. And second, very easy to say, but maybe difficult to implement, is we, at the end of the day, all the regulators have only one common motive, which is to protect the end customer. So when we launch any feature, or when we wish to push out some form of new innovation, we always try to put ourselves in the shoes of the regulator and see how does this actually benefit the end customer. Because seldom have we seen any fintech having gotten into some form of new business, or maybe launching some features, getting into trouble if it actually just benefits the end customer. So if you think along those lines, you are very well aligned with what the regulator also thinks. So there'll not be any form of a divergence or any shocks that you might have. So we try to put ourselves in the shoes of SEBI and say we launch something new. So will SEBI want or be okay with this customer accessing this product in this manner? Yeah. And if not, it's a difficult call to take. But we will have to tell that, no, let us not go down that path, because sometime down the future, if at all it gets pulled up, it's a very big deal for us to roll back everything we have done. And the compliance as a value proposition takes a hit for the company also. That's what we've generally followed. That's worked out well for us.
Perfect. So I'd like to paint a scenario, right? You wake up in the morning and open the newspaper and find your company name, in the news for all the wrong reasons. That it's, and it can apply to any business model, right? So whether it is a cyber attack or any insider employee who has leaked out, probably data, and some of these things related to reputation are really non-tangible, right? What are your thoughts on, or your first reaction in terms of, reacting to such a event, right? And have you put across any thoughts in terms of, if this was to happen, what would we really do? And are there any measures that currently exist in the place? Because I've personally investigated a number of such cyber incidents, and the first port of confusion is always, should I inform my customers, and to what extent, right? Because while it's important to be transparent, at times the dilemma is also to what extent, right? And how do you manage that fine balance?
I think you're calling out nightmares on a Friday evening. It's not a great thing to hear, but still, I think, frankly, the specific case will have to make a judgment call of what needs to be done from a communication standpoint. And I think in some cases, full transparently conveying it back to the customer might actually help, because some of these are not intended consequences. Of course, I think the second piece I'll add to that is, most of the time, many of these situations are great learning experiences, and every time any such kind of a activity happens, it only allows you to go back and tighten the screws even more. To some extent, you start to add layers of security, you start to add layers of cover that will ensure that such kind of instances do not reoccur. But I also think that in some of these situations, I think regulator is playing a great role in trying to lay the path ahead to say what and in how much manner can you really go out and control your leakages, because it's part of the growing up.
Crisis management plan.
Correct. Correct. So I think in some manner, when you start to lay out the plan for your business, a lot of time at that time it's a big irritation of why do I need to put down policies, where do I need to define that there needs to be recordings of things or records of documents or various other sets of activities. But these kind of situations make you realize that such kind of early preparations can actually prevent a lot of this. And this thing happens on technology side as well, that one can learn from mistakes of what others have gone through and try to cover up. For example, in our case, I know when I check with my technology team, they're always building that second layer on top, because security and data leakage has become such a big issue in the industry, and it directly hits the point of trust that we have been discussing at the beginning, that you're already trying to think 2 steps, 3 steps ahead, that if my first layer were to break, what is my second layer? If my second layer were to break, how am I going to manage it? And all of those kind of things become handy.
Yeah.
So,
and these days, I think with social media, even if it's not a security issue, even if it's a slight, say, the UI was not proper or a system glitch, right? It's taken to, Twitter, and it's blown out of proportion. So, security is one part. It may or may not be a security incident. It happened with one fintech. I don't want to name it. But it became a big news, right? And it really questioned the integrity. And it was in the wealth management space, right? Mutual funds. It really questioned whether should I really be, using them in the first place. And it's not a security issue, right? So that really, puts into question as to, and my question more was, how do you kind of handle this, situation? Is it something that you do with your PR and comms team, or how do you handle the media in that sense? Is there any thought or any experience that's gone in?
Okay. Kartik,
This was out of syllabus question.
no worries. If you look at almost all the founders in investment and wealth management industry, I would believe everyone comes from investment background, right? And it's in our DNA. We think risk first for everything that we do, every feature that we build, everything that we roll out, every interaction that we do. So whether it comes to social media interactions or things which have gone wrong, I think most of us would have played it in our mind so many times, saying what happens if something like this is gonna play out. And we would have some form of playbook in our mind. On some occasions, the PR team is able to do the ceasefire. On some occasions, we would reach out to an expert like you and understand. It's like if something like this would have happened, or if something like this has happened with some other client, how did they manage it? And as he said, I think regulators are doing a very good job. A lot of times they would have created those guidelines, those roadmaps for us, which helps us solve such problems.
So 2 points that come to mind. First is, as he had mentioned too, so most of the startups would not have gone through this, and it may be like a first time shocking incident for them. So first step we do have in mind is, okay, can we consult with some experts and who will be outside? Do we have a ready set of mentors or experts we can consult with and tell them, hey, look, this has happened and what is the course of action? Because founders as such, when we think of it, there are a lot of other issues that come to our head, right? So there's a PR, there's a damage done on the business side, maybe on the PR side. So better to have an external person who's been there, seen a lot of this, and take advice from them on how to approach. Second thing is communication. I feel adds a lot of value here, being very transparent. And in many of the cases, customers also might not end up expecting a solution of how can this be solved in the first attempt itself, but even being able to keep them updated on what's happening itself is sufficient. But regular communication is much better than not sending out anything for 10 days or 15 days at all. And I think on a lighter note, Indian companies always have a fallback option. If I see my name on newspaper, we can just say that Western media is trying to belittle India and go forward with it. But yeah, that I think communication is what we typically wish to focus on, and having a backup of mentors who we can speak to and quickly see how this can be addressed, who can bring a outside perspective on how this should be handled.
Fair point.
No, I think I agree with Vishranth. I think just the one thing I would add is basically the minute this happens, the first thing to do is notify users. Sure, there will be PR, comms, media reaching out to you, etc. I think the best thing to do would be talk directly to users. Otherwise, your narrative always gets a little muddled. So as directly as you can update them, if they have to take an action, change something, do something, that's the first thing. I think hopefully in our case, if something like this happens, I would call you itself because you've done the audit for us. So that will be the second thing for me to do. But and I hope this never happens to any of us, right? Like touch wood, obviously. But I think the silver lining that will come from this is there will be a internal culture of secure development that will start getting built in. Like that's what today nobody really appreciates in engineering or product, because you have to start doing access management, credentials, traceability, authorizations. Like nobody wants to do that because it gets in the way of what you're trying to do, which is ship. So like that culture today is built more top down, and because you have to do it, in our case also because our partners hold us to a higher standard, and hence we have to kind of comply with it. But this just starts creating a more organic, natural, innate culture of secure development. So that's the only silver lining. But yeah, I think the best thing to do would just be communicate directly to users, not kind of tarnish the narrative anywhere by trying to go elsewhere. Whatever you feel directly with users is the best.
I'm only thinking if Maggie could come out of it, maybe everyone can come out of it.
Yeah, no, I mean, there have been various instances, I mean, globally and India. And I think it really depends on, how serious a turn it takes, and, like you said, how fast are we in responding to clients and customers, and really give them that assurance that, while there has been a breach, it doesn't really directly affect you, depending on the situation, of course, and give them that confidence and building that confidence. But yeah, I think the one other interesting part, and I don't know how we are doing on time, but the one last part is, and it's taking increasing importance, is a reliance on third parties, right? And we, it's inevitable that we can't run our business without the help of third parties. In fintechs, third parties take a little more elevated role because, and depending on your business, of course, how much are you interacting and connecting with the other fintech or other ecosystems. So that's one part, the more technology part. But like you said, you outsource security. Similarly, you outsource other functions. So what's really happening is, even the hackers have started realizing that you would have built great security controls, but your third party might be probably a vendor who doesn't have big investments. So why not compromise them and through them get a channel within your organization? And that's happened to the biggies like Microsoft and Google as well. So what is your thought process on that? Maybe a bit of insight there would.
Yeah, maybe I'll take it with an example actually, with one of the third party vendors that we were working with. I defined the risk that needs to be mitigated on two parts. One is the intended risk and one is the unintended risk. I think intended risk can be controlled, and in this particular case, intended risk was more about data security, and the question in debate was who all within their organization have access to my data. And I want to ensure that I limit that and I only make it relevant and open to people who should necessarily have access, and their defined roles and their defined accesses need to be transparently discussed and put down in a form of document to say this is exactly the way in which they will access that data, and there will be no other way that anybody else can have access to data. So those are intended protections that you can try to build. And then of course comes the point of unintended, where, as you said, some third party hacker trying to seep into their system is trying to look at our data. There I think of course protocols are defined, encryptions are defined, and one can add best practices of what one is comfortable with. Not something which can be overlooked, but I just wanted to add my bit of that you need to control the intended risk more importantly. I think the unintended risk, the whole industry talks about it, and the whole industry has got protocols defined of how am I going to encrypt my data, and you need to select your third-party providers by knowing whether they are following those best practices, those certifications, those best standards that technology platforms need to provide for. Those are, I think, diligences that one needs to do, but take that extra step of going and finding whether both kind of risks are fully mitigated or not.
No, totally agree. I think like we are in both camps. So like we work with third party. We are also the third party for multiple. So we totally understand how important it is on both sides. What Shobhit mentioned, I think, is a great starting point. You obviously have a lot of internal guidelines, reviews on how you share data, what data you share, what data others can access, both internally as well as externally. So that kind of forms like the template on which you build this. But otherwise it comes down to like most of the best practices. Do the partners have a good security posture? Like in some cases we do security audits before doing integrations as well. But wherever this risk, like that you're sharing data that absolutely cannot in any case, because ultimately you don't control what happens there. Our tech team, our GRC team has actually taken the view that we'll build that in-house instead. So whatever is okay to a certain extent, I think they kind of figure it out with all these best practices with these modules. But wherever there's too much risk on any of this, we decide to build it in-house. It's a cost, it's time, there's effort into it, but it's worth it for the long run.
So we classify the third-party relationships we have into three broad categories. So first would be a relationship that's like pretty much mandatory, without which the core business cannot run at all. Right? Say, for example, being in the mutual fund space, we have to work with, say, Fintech and CAMS. Right? They are the ones who execute all the transactions and have access to all our data, or customers' data, advisors' data, and so on. So in this case, genuinely, since they are very important in the ecosystem, there's nothing much we can do except just hope and pray that things are fine at their end, and a regulator is taking care of whatever is required to constrain them and so on. The second category of vendors is something that is not mandatory, but either we could do, or the vendors are fairly large and very well established, so that they can maybe do it in a more compliant way with better security. Right? So in our case, the example would be processing of payments. So either we can be the payment processor by integrating with payment gateways and transferring the funds, or we can choose to work with someone like a BSE or NSE who have all of these protocols in place already. So here the former again will give us much more flexibility to innovate and so on, but given that here for us compliance is very key, we have decided to bank on an exchange where things can seldom go wrong. They are under much more scrutiny and so on. The third category is the tricky one, where we should be able to build it ourselves, but there's someone else who can build it for us, but they are a smaller stage, early stage startup, or maybe they might not have prioritized compliance. What do you do in that case? So as someone here said, so security audits, reference checks on who are the other customers they have worked with. Do they have any large customers who would have probably looked into the security piece? These are all some of the things that we do. And we always have to be open to two options in this case. We just say that, okay, it's a new product, it has not yet hit the market, we are not sure of the compliance and security. How about we maybe wait for it to mature and don't do it now? It's a hard call to take, but that's something we might have to do. Or another option could be, we, as Vasanth said, we might have to take on the cost and build it in-house. So that's broadly how we categorize the three type of vendors we work.
No, fair points, fair points.
Kartik, I'll quickly close this point, right?
Sure.
Do your own diligence. Try and ethically hack into their system, right? If you know that it doesn't break, maybe it's good enough for you to use.
No, I think valid points. You know, and a lot of fintechs I know do employ this whole bug bounty program where they invite you know, actual hackers to come and break their security and then, you know, reward them based on, you know, whatever findings they have. It's a good way to, you know, kind of get to know a real world you know, security loopholes that exist in your system. So yeah, I mean, that's also one very popular way. I just wanted to do a quick time check, and maybe we can take questions from the audience.
We have a couple of questions.
All right. Yep.
Hi, I'm Satvik, and I had one quick question, especially on what even Shobhit mentioned, on how do you tackle banks, especially being in the wealth management space, because of two things. One, the brands, and them having the brand, and second, the distribution. As you mentioned, you know, as a doctor, you know, we mentioned as financial doctor, right? So, like, how would you tell them not to go to Apollo, rather come to my clinic, right? Similar approach. How would you tackle the banks, especially in these two aspects, that is them having a good brand, and apart from the brand aspect of it, it's obviously the distribution they have and access they have. So that was my question. Thank you.
No, I think that's down to the brass tacks. You basically have to add value to your customer, and customers will see that what is it that you are solving for them. If there is a difference in the value proposition, if there is a difference in what you are really doing for those customers versus what banks are doing, is really the meat on the bone that you will have to bring to. There's no doubt about the fact that banks will have larger brands and they will obviously have the might and the power to reach out to larger set of audiences. But I think that's part of the business strategy, that you will, over a period of time, build your own proposition which will attract more to customers who will see that banks are possibly going to be better at banking solutions, and maybe investments can be more looked at from the lens of investment professionals who, I think somebody said, day in and day out breathe investments, right? So there is always a difference. It's the same reason, to extend that argument of doctors, that you will go to a specialist when you are looking at a specialized problem. If there is some health issue which happens with someone in the family, right? You always want to go out and find who's the best person who's going to be able to solve this best for me. So I think the answer lies in expertise, the answer lies in that domain expertise, and that's what will differentiate you from not just banks, but any other competition that you are really fighting against.
Like Satvik, if you're asking about how to work with banks,
No, it was about, and again, like small case have this mode of having different products than a bank. But what if tomorrow bank itself says that I say something similar to that? How do you kind of tackle it?
So we do get this question quite often because our advisors on the ground level who talk to mutual fund investors, usually these investors also have banking relationships, and there's a relationship manager who keeps knocking their doors, asking them to invest in NFOs and so on, right? So two things we have seen that has worked out well. Number one is talking more of a neutrality perspective, right? Say what happens is most of the banks have very revenue and sales targets driven, right? And if you take an ABC bank, chances are extremely high that they only sell ABC affiliated products. And when it comes to managing money, are you doing the right thing for me is a question that a lot of customers have in their mind. So as someone who is independent, maybe an independent platform or an advisor can always use this as a hook to tell that, hey, look, if you approach a certain bank, you might be only looking at ABC products, but if you come here, I will genuinely look at all the products in the universe and offer them the best to you. This works quite well for us. And second is another aspect which we can use for our advantage is banking relationships in many cases are just very short-term in nature. Because the RMs and the employees keep switching over, right? Hardly do any of the top banks have folks who stay for 3-4 years. And again, when it comes to money, there's a emotional relationship that the customer builds. So being able to tell a customer confidently that, hey, look, why do you have to worry about dealing with a new person every time who you'll have to explain your financial situation to? I'm independent, I'm going to deal with you for the very long term. That actually works really well. So these two together, if conveyed in the right manner, can position an independent platform or an advisor for wealth products in a much better manner compared to banks.
Thank you. We had one more question. And is there a mic?
Hey, my name is Shiv. I'm from Instream. So my question is what is the extent of using tech, specifically AI, and what role human interaction play in governing compliances? So for example, alerting, communication is one of the key pillars that we discussed about, right? And what is the way forward that you're looking up to? How this prompt actions could be communicated, how breaches could be communicated in a much faster way using technology?
You want to take that?
No, so I think much has been said about AI in the last 3 days. So I'm not going to talk about what all use cases AI has, but the way we are looking at it is that AI is a great dependable tool for us to leverage on because it is able to solve multiple use cases, whether it is about servicing your clients or whether it's about discovery of products or whether it is about finding details about investments, because investment market in India is growing disproportionately large. There are possibly 6,000 mutual fund schemes, another maybe a few hundred PMS schemes, and another few thousand more stocks for one to evaluate. And investors are being provided for opportunities all across the spectrum. And in many of those use cases, I think AI can play a very, very important role in trying to distill out the relevant information out of the multiple sets of details which are out there. So I think AI is only starting to hit, and thankfully wealth management industry per se hasn't really seen big inroads from technology per se, I would say, and from AI even lesser. But I think it is going to be a very, very important tool as we go forward. Multiple use cases are already out there that people are using, and it's not just in India, even globally, people are now seeing the role of AI in their own businesses, and I think it will only grow bigger from here.
I can add a couple of points to this. So my view might be a bit biased because I believe wealth management in India can largely be offered by human advisors only, and at any point in time, a significant chunk of the population will require a human to talk to you and say, hey, look, this is happening and so on. So from that perspective, I can maybe add a couple of points here. So AI we can classify it internal and external factors, right? So I do believe AI brings a lot of efficiency for a platform or an advisor when they operate internally. A lot of things that they do, maybe in terms of putting out content, in terms of doing research, can be done at a much, much faster pace due to AI. I'm sure a lot of sessions would have addressed and spoken how that can help internally. Externally though, what I firmly believe, and we do see that pan out very well at the ground level too, is communicating about the products or anything to do about say mutual funds or any other wealth product. When the communication goes out to the customer as a bot or as AI talking to the customer, the belief in what is being said is very less, right? Say very simply put, someone has invested 25 lakhs, some unfortunate market volatility that's at 20 lakhs, right? Any amount of app notifications, any amount of AI will not be able to calm that customer down as much as a human advisor telling him that, hey, don't worry about it, these are so and so reasons. So I feel in our space of digital wealth management, AI has a lot of use cases to increase efficiencies of how companies work, how teams work, how research can be done, how communication can be put out internally. But externally, when talking to the end customer, I feel the human touch will always score more over AI.
Excellent.
Yeah, I think with that, we'll have the closing remarks, please.
All right. Great. So I think I must really appreciate the CEO founder's mindshare on security. I know it doesn't come naturally, but I really had a very insightful discussion, and some points even I'm taking away from this discussion around your thoughts on security. But thank you very much for spending this time and taking the time out to discuss on the topic of how do we build trust in digital wealth management platforms. Thank you very much.
Give it up, ladies and gentlemen, for this esteemed panel that we just had an experience with, talking about building trust in digital wealth. And we request you to please gather up on the stage for a group photograph.